Okay, we might get started now. There'll be a bit of an intro, so anybody who comes in later will be able to pick it up pretty quick. So welcome to the first AIBB webinar. The idea is we're going to run a series of these on different topics throughout the year. The idea is to make them probably around about an hour. We'll just see how we go with timing. And so what we'll do is, to begin with, just to get you used to using the system, I'd like you to open up the bottom left-hand corner where there's a triangle to put tick if you've attended a webinar before, or cross if you haven't attended a webinar. So if you could tick or cross whether you've attended a webinar before or not. Okay, we've got people coming through, ticks and crosses. The ticks are probably winning by a bit, but we've got a few that this is their first webinar. So welcome to those that have their first webinar. Most people seem to have picked up how to do that. That's good. And we're up to 23 people, which is even better. Okay, so what we'll do, by way of background, Peter Wallace is my name, from Endeavour Capital. We're a mid-market corporate advisory group. Of recent times, we've been asked to sell some small business sales, and part of doing this is that a few of the small business sales we've been doing have actually led to some buy-side activity, and so we thought it might be useful for both the mid-market brokers as well as the small business brokers to consider whether they should develop a buy-side practice. Sorry, went too fast. In terms of me, I've been in corporate advisory and private equity for 25 odd years, typically work in the lower mid-market space. And for those of you that don't know me, I'm New South Wales President of the AIBB. So in terms of the agenda today, I'll do a bit of an intro in terms of the AIBB webinars, what we're trying to achieve, and then go into the buy-side practice. What is a buy-side practice? Typical activities of a buy-side practice, advantages and disadvantages, what are the best clients, legal and risk issues, fee structures, promoting the buy-side capabilities, and I would love feedback on these webinars and in terms of ideas for future webinars as well. And the contact details will come through in a moment. So in terms of the AIBB webinars, you'd all be aware that the AIBB has developed a range of educational programs. We have the Certified Practicing Business Broker and the Registered Business Valuer programs. What we're seeing is that we've got quite a range of different members with different skills and different areas that they operate in, and different people have got different needs in terms of training. And so given that we've got a diverse group of members all over Australia, we thought webinars might be a useful way of giving people relatively short, sharp, hopefully straight to the point, training and education on specific areas. And so the idea is to make it different webinars will be suitable for the small business brokers, others for the mid-market, intermediate or advanced brokers. We'll be touching on valuations from time to time and doing some industry-specific things. And so a shopping list of potential topics we might cover are things like trends in hospitality business sales, trends in franchising sales. We might get an accountant to do some year-end tax planning advice, something on discounted cash flow analysis for valuations, fee income and virtual data rooms. They're just an idea of the sort of things we might consider. And so if you've got any feedback, please send them through. There's my email address, and it will also be at the end. And so if you can give some thought to how you found the webinar, what areas you think we can improve. Just to let you know, this will be recorded, and the idea is to put it on the AIBB website. So if you miss a webinar, you'll be able to come back later and to have a look at it in your own time. We'd also appreciate feedback in terms of timing. I think I stuffed up the first one. I forgot that daylight saving had started. I was going to have it so that it was roughly at lunchtime on the eastern seaboard, and so for the Queensland people, we may have to put it back a little while. So what is a buy-side practice? So most business brokers spend most of their time selling businesses. A business buyer's agent acts for the potential purchaser of a business and can only act for the purchaser. So you can't act for the buyer and the seller in the same transaction. In the real estate market, you would have seen that buyer's agents are growing in exposure. So purchasers of real estate are looking to tap the skills and networks and negotiating capabilities of the buyer's agent for their benefit, partially as an outsourced activity and partially in terms of the skill base of the buyer's agent. In the mid-market and large corporate M&A space, buyer-side activities are common. I have to say they're probably not that common in the business broker space. So I'm just wondering, we'll do another poll. If you could tick whether the buy-side practice is a significant part of your overall activity. And so say is buy-side more than 20% of your business activity? If you could put tick for yes and cross for no. We've got a few that are changing. Okay, so looking at it, it's roughly 50-50. I guess looking at some of the people, John, to vote, bottom left-hand side, down the bottom there's a triangle. If you hit that, it will go up. There's a tick or a cross. There you go. Thanks, John. Okay, so roughly half-half, which is probably to be expected. I think that if you look at overall brokers overall, I think that it's probably much lower than half. And looking at some of the members of this group, they're those that have that do operate in the mid-market as well as some of the in small side as well. I think the important thing is that every broker is different, and you need to work out what your marketplace is, what your skill base is, and whether things are whether a buy side is relevant for you or not. What part of the reason for doing this is that a couple of transactions I've had over the last 6 months, I thought, well, maybe there should be more buy side activity in the traditional business broker market. And as I go through it, I'll give you some examples in terms of the two transactions that I operated in the small business market, what would be traditionally the small business market, but using traditional buy-side techniques. So what are the typical buy-side activities? In many ways, they're the inverse of selling a business, in that you're acting for the buyer, not the seller, and so the activities that you would normally do as someone who's advising the seller, you actually swap that around and act for the buyer. So the typical side would be the search. So you'd be looking for businesses that meet your client's criteria. You'd be looking to qualify the targets, try and get information out of them, and provide a summary of the qualified targets to your client. I'll be going through the search process in a little bit more detail. The next stage would probably be negotiations. You'd be coming up with an initial view on value. You'd be helping to structure and price deals and negotiating terms and conditions. Again, that's probably similar to what you're doing on the sell side, but on the other side. The next side is due diligence, evaluating the opportunities. Normally, I'd be part of a due diligence team that would be looking at buy-side opportunities. Importantly, you want your buyer involved in the due diligence process, because they're the ones that are going to be running the business. They're the ones that are going to be making the decision to whether or not to proceed or not with the acquisition, and so they need to take responsibility. And so that normally I see my role in the due diligence team. It actually varies depending on the skill base of the purchaser. If it's a corporate purchaser who's bought many businesses before, normally I don't have much of an involvement in the due diligence process. If it's a smaller corporate or individual group of investors, I typically would be more involved in project management, the due diligence process, rather than doing the detailed due diligence. I guess we might do a bit of a survey now in terms of, for those of you that operate in the buy-side business, are you very active in the due diligence process, or do you leave that to your client? If you could do the ticks and crosses again. Okay, so it looks like most of you aren't involved in the due diligence process, that you're only principally involved in terms of identifying the opportunities. In fact, it's almost universal, other than a couple of people that aren't involved, that are involved in the due diligence process. For those of you in the mid-market, I suspect that probably will change. I think that there's an important role to project manage the due diligence process. If the purchaser doesn't have those skills, there's probably an opportunity for you. However, you do want to make sure that you manage your risk process, and we'll go through that a little bit later as well. The next one is one that typically I don't get involved with, which is assisting in the integration of the purchaser's business. Historically, I probably wouldn't have even put this up as a buy-side activity. The reason it came up is I was selling a business to a UK firm a couple of years ago. It was a $15–20 million transaction. And the purchaser, their corporate advisor, was heavily involved in the integration process, and so that he was the project manager of the integration. I have to say that's not something that I've seen very often. And I suspect, given that the responses we've had in terms of whether you're involved in the due diligence process, I suspect there'll be even less of you involved in terms of the integration process. From my perspective, I very rarely get involved in the integration process. I guess from a wanting to ensure that an acquisition is successful, I want to see an integration plan that they've addressed all the issues, especially the soft issues of people, but normally I won't be involved in the integration process. So in terms of advantages and disadvantages of buy-side practice, for the client, they have initial confidentiality in approaching potential candidates. Though I'd have to say that lasts about one phone call, because for every vendor who I approach, one of the first questions they ask is, well, who do you act for? And so that you probably can't keep that quiet for very long, but there's initial confidentiality. The client's got access to your skills and network. There's additional resources which they may not have. And importantly, there's an independent expert view on valuation. And so that I've had good success where a purchaser and a vendor have been at loggerheads in terms of price, where they've approached them directly. If I come in and say, well, here's market evidence to say that this is an appropriate valuation, it's more likely to be accepted than if a buyer just goes to a seller and says, this is what the price is. And so I think that is a definite advantage for the client, particularly as brokers, you're aware of what's happening in the marketplace, and you have a lot more credibility in terms of being able to demonstrate appropriate valuations. For the broker, the fee structure, which we'll be coming to later, tends to be a bit different from sell-side transactions. And so that there is normally a retainer and success fee. I try to target buyers that are likely to purchase more than one business. In my mid-market transactions, I've probably actually bought more businesses than I've sold in terms of numbers, not in terms of dollar value, because I might have a client that might buy 5 businesses, and then I sold the overall business. And so for the transactions are smaller, but they're more in number. From a broker's credibility point of view, being seen as a buyer in the marketplace helps you become be seen as an expert in that segment. It's also somewhat counter-cyclical in that often the best time to buy is the worst time to sell, and so that if it's a quiet time on the sell side, there may be cash-out buyers looking to buy, and so that it's somewhat counter-cyclical. And also that if you're seen as an expert in a particular segment, it may lead to business sale leads. I know that one of the transactions I'm working on at the moment, it's a relatively small business that my client wants to buy. But as part of the search process, I've actually come up with a few leads in terms of things that don't fit the criteria of my client, but are good businesses to sell. And so that sometimes acting as a buyer leads to sale mandates. In terms of disadvantages, we're not charities, we expect to get paid, and so the client is up for fees on that. For the broker, fees tend to be lower on buy-side transactions than sell-side transactions. You can't act for both buyer and seller on the same transaction. You've got the usual buyer-seller gap in terms of unrealistic vendors. And I'd have to say that there's a tendency of, if you approach someone to buy their business, their immediate unrealistic expectation on price goes up. And so if you've got a business that might be worth a fair market value of, pick a figure, $1 million, most vendors' current expectation on their value is $1.5 million. If you approach them and say, I've got someone who wants to buy your business, their price goes up again. And so you have to manage that price expectation down because just as we've got unrealistic price expectation on vendors on the sell side, we also have unrealistic expectations when we approach people to buy their businesses. There's litigation risk which we have to manage, and I'll be coming to that a bit later. In terms of identifying potential sellers for your business, it's probably similar to mid-market sales, and so that's a lot more. If you're selling a mid-market business, it's much more likely to be a search-based transaction rather than for a small business sale, which tends to be more advertising-based and direct marketing approach. And so you find your sellers through the various listing websites, clients identified, businesses identified by the clients, and then searching through industry associations, magazines, internet, databases. And I've actually had quite some success, I don't know if I should tell you this or not, through LinkedIn, where I've joined a LinkedIn group for a particular industry and put a topic up for discussion that I've got a client wanting to buy something in this industry, approach me privately if you want to sell. And I've actually had quite some success in getting people interested in selling from that method. that's also one that I've actually had potential buyers, potential businesses to list that weren't suitable for my client through that process as well. The way I typically would work with a client on that is to develop a broad criteria. So they'll develop a broad criteria, and then what I try and do is to give them a range of different deals that may or may not fit within the criteria, just to test where they're at. I don't know if any of you have seen that British TV show called Escape to the Country, where people want to move to the country and they show them through 3 houses, two of which meet their criteria, and the third is something completely different, just to get them thinking. I use a variation on that sort of approach in terms of testing my buyer in terms of exactly what they do want, because just like that TV show, oftentimes their criteria does change over time, and so it is a bit of an iterative process where they start saying they want something and what they end up buying is somewhat different. I guess you see that also in terms of people who approach you to buy a business you got listed for sale. They may want to buy a newsagent and end up buying a post office, or end up buying something completely different once they've gone through their own criteria and tested their criteria. So who are your ideal buy-side clients? I think first and foremost it starts with you. What are your skills and networks? If you don't have credibility in a particular marketplace, you're not likely to be successful. And so I think what we're seeing is that there's tending to be more and more specialisation within business brokerage and the mid-market side of things. And so what areas are you focused on that you have got those credibilities? You have to know the industry. And an ideal one would be an industry that's going through a consolidation phase. And so you've seen industries where it's been a fragmented industry, and then somebody's come along and gone through that rationalisation process or roll-up process. I guess you've seen it in bottle shops, you've seen it in pubs, you've seen it in childcare centres, even though that's gone the other way, where a corporate will come along and say that we've seen a fragmented industry, that we see an opportunity to get economies of scale by putting 10, 20, 50 businesses together. If you can find those sort of industries and a company that has got the cash to operate in that marketplace, there could be some good acquisition, some good buy-side activity for you. I'd have to say that if they're a major corporate, they've probably got their own internal buy-side team. And so I think in terms of the size of the company you're looking at, you don't want somebody that's too big, because if they're too big, they'll have their own in-house corporate advisory team. And so you want someone that is a bit smaller, so they don't have a full range of skills in-house. I prefer to work for corporates and private equity groups rather than individuals, because they're more likely to be an ongoing buyer. I want to understand what they want to buy, why they want to buy it, and why they think there's an opportunity. And as part of that, you all go through, qualifying your buyers and qualifying your sellers in your business brokerage business. Do they have the funds? Do they have the experience? Is there a depth of team? Are they looking for the perfect deal, or are they being pragmatic? And so you need to go through that qualification process. An interesting one that I think is a fairly minute opportunity, but one that came up for me a little while ago, is that I acted for a buyer, an individual buyer who's wanting to buy a particular business. It's not something that normally that you do, because if you've got a buyer, you want to sell them one of your businesses. This person was actually working in the business and wanted to have somebody negotiate for them to get the right deal. When they came to me, the purchase price, so that the vendor had an expectation of $1.5 million for the purchase price, I got it down to $500,000. I think it only works where they've got a specific business, because otherwise you're wasting a buyer on something that you're only going to get a small transaction fee on. Oh yeah, you're having a problem with the audio, yeah. Russell, can you hear me now? No. Okay, in terms of plans to avoid, if they're not willing to pay a reasonable retainer, I don't want them. Unlike a sell-side transaction where most of your remuneration is on the sale, with a buy-side transaction, you do want a retainer along the way because you don't know what they're after. In terms of they've got to have money, they can't be dreamers, they need to be able to make a decision, they need to have a clear idea in terms of the sort of candidates they want to be, and they must be willing to pay a price for a business. I've got one client who I put about half a dozen reasonable businesses to, but they found a reason to knock every one of them back. As we all know, there's no such thing as a perfect business, and it's about having the right level of risk-reward ratio. But if you want someone who wants to pay a cheap price for a great business, they're probably kidding themselves. And so you want to go through that screening process to make sure they're willing to pay a reasonable price for a reasonable business. So in terms of attributes of a buy-side advisor, I think that first and foremost is credibility. You're probably working with either a corporate acquirer or a private equity group or high net worth individuals, and so you've got to have credibility with them. Credibility in terms of knowing how they operate and the sort of things they do. David, I'll be coming back to fees in a moment. You've got to have credibility in terms of being able to present to them, and also credibility within the marketplace. You've got to have the networks. Unlike small business sales, which tends to be advertising based and then direct marketing approach to your client base, this is much more of a search based business. You'll have valuation and negotiation skills. You've got negotiation skills. Many of you here, I know, are pretty strong on the valuation side of things. You probably may need to do some structuring, whether it be earn-outs or deferred considerations, and so you'll be able to need to be comfortable in terms of operating that marketplace. And you need to have, I think you need to have due diligence project management skills, though it's interesting that survey we did before that most of you aren't involved in the due diligence side of things. So should all brokers develop a buy-side practice? My view is probably not, but I think that there's probably more opportunity on the buy side than what a lot of traditional business brokers realise. In terms of legal and risk issues, you'll need to look at your state-based regulations in terms of what documentation and accreditations you need. I'd have to say within New South Wales, the legislation isn't as clear as what I'd like. It's clear in terms of buyers agents for residential real estate. It's definitely silent in terms of buyers agents for business brokers. And so you need to make sure that whatever you've got complies with your own state-based regulations. Importantly, from a risk point of view, you need to be your agency agreement, or whatever you call it, needs to clearly identify what you are responsible for and what you are not responsible for. And that is particularly revolving around the client has to be responsible for the due diligence, and they have to make the decision whether or not to proceed. You don't make that decision, they don't. They have to. And so your job is to facilitate them getting in a position where they can make that decision, but ultimately they have to make that decision. In terms of something near and dear to our wallet, fees for buy-side mandates. I'll be interested in terms of what people's approaches are to fees on the buy side. I'll go through my side, but if you can also put through how you view buy-side fees. Typically, I'd charge a monthly retainer plus the success fee. In terms of comparing that to a business sale, the retainer is usually considerably higher and the success fee percentage is lower. And so I guess looking at it normally for a small business sale, for me something like 90% of the remuneration or over 90% of the remuneration would be on a successful sale of the business. For this one I'm working on at the moment on the buy side, roughly I'd say about a third of my income is on retainer income, with 2/3 based on a successful acquisition. The reason that typically you do that is that you can't control the process. If you're looking to sell a business, you can control that somewhat. If you're looking to buy a business, you've got less control of the buyer and the seller than what you would for a sale transaction. So therefore, in my view, it's more appropriate to have a higher retainer percentage and a lower success fee. I'd be interested to know what other people's experience is. Do you have the same, or do another poll, do you have the same fee structure on the buy side and the sell side? You can do ticks and crosses there, please. Okay, so nobody has got the nobody has the same fee structure on the sell side and the buy side. That's good. You shouldn't have. So normally I'd do a retainer for usually 6 months, and then the success fee after that. So interested to see if you're. I'll put a theoretical company out there. If you're looking to buy a business, say for $1 million. What sort of fee structure would you normally charge? If you want to just type into the little box the sort of fee structure you might have. We're all silent on fees, are we? Don't want to share what our experience is on fees. Hello? What does they mean? There we go. Thanks for that, Mark. So Mark would charge a $5,000 a month retainer and a success fee of 3 to 4%. And so that I suspect that if Mark was selling that business, he'd charge a lower retainer fee and a higher success fee. So Larry's got a retainer of 3.5, a success fee of 3.5. Larry, I suspect you should get a more retainer fee than that. David, $5,000 up front, 30 grand, 30 success fee, yep. Oh, okay. Retainer, once the candidate is identified, in a 6% success fee. It's an interesting approach, Mark. Okay, so I guess as a generalisation, you have a higher success fee. Yeah, 2 to 3. It depends on the size of the transaction. Yeah. The challenge in terms of good price per client, that's one of the areas of conflict as to why you take a higher retainer, because if you're selling a business, the best outcome for the client is a sale of business at above the price that you said in your agency agreement. For the buy side, you don't actually, success may be saying no, and so therefore it may be your recommendation may be don't buy this business, or sorry, your suggestion to the client to consider may be don't buy this business. So therefore, you've done a lot of work on it. You've identified that they shouldn't buy it, and so therefore, why shouldn't you get a reasonable fee for them to walk away? And that's, I guess, the general view in terms of why you need to have a higher retainer and lower success fee. Okay, that's been some useful feedback there in terms of different people's views in terms of fees. So thanks a lot for sharing that. I guess as an industry we probably haven't shared as much as what we should, but thank you for doing that. So in terms of promoting your capabilities, view it like a marketing program. How are you going to promote your business on the buy side? What industry segments are you going to target? What companies are there within that industry segment that you're going to approach? Has your website got buy-side capabilities? Actually, we might do another question on that. Does your website have that you assist buyers in buying their businesses? You want to do a tick and a cross on that? Tick if your website has got you assist buyers in buying businesses. Okay, so it's roughly 50-50. I'd encourage all of you to put it on there. Even if it's not going to be a major part of your business, why not put it on there? And then make sure you've got the marketing collateral to support it. So identify what you've done in terms of the buy-side activities and promote yourself. It's like any sort of marketing program. Develop your program, work out who you're going to target, how you're going to sell them, and then go from there. I guess the key takeout for me is to make sure you focus on the markets that you have credibility in, and target those companies that meet the criteria that is likely to buy more than one business and have a good working relationship with you. Okay, then I'm going to put my coaching hat on. So what? Okay, Bruce has asked a question. Isn't it working against your client's interest if a buyer's agent is charging a percentage of the acquisition cost? Therefore, a fixed fee is the only way to go, perhaps with some incentives. Actually, the good question, Bruce, is that there is a conflict of interest there. I guess there's also a conflict of interest in terms of selling a business. The buyer, if you sell a business, the vendor wants the maximum price. There's a slight conflict with the agent, and the agent wants a transaction to happen. In many ways, it's similar. For this relatively small business I'm looking to buy now, I've got a fixed fee. So I've got a retainer and a fixed fee in terms of percentage, and so that you may want to consider doing that as well. So good question, Bruce. So I guess I'll put my coaching hat on. So what? So what, if anything, are you going to do as a result of this session? And if so, by when? The coaches out there, business coaches, will tell you, unless you write down what you're going to do by when, straight after a seminar, you're not going to do anything. So that applies not only to webinars, but various other industry conferences you go to. And so what I'd encourage you to do is to, after this session, write down what, if anything, you're going to do as a result of this session, and then hold yourself accountable to by when you've done that. And finally, thank you. I'd be interested in your feedback, both in terms of, okay, so John asked, what's a reasonable monthly retainer and success fee for a buyer up to $1 million? I'd say something like $2,000 a month, and then a retainer of 25, 30 grand or something like that. That's a personal view. Obviously, it depends on the type of business and how much work you've got to do. but like all these things, it's negotiation. Were there any other questions that people wanted to raise before we sign off? Okay, otherwise I would really appreciate your feedback on this webinar, both in terms of what we did right and what we did, areas for improvement. I'd love some ideas in terms of future topics that you'd like us to cover, and in particular, if you'd like to put your hand up to volunteer to present one of these webinars, that'd be really good. Okay, Mark asked a very interesting question before we finally sign off. If you're acting on the sell side, if you're acting on the sell side, would you recommend that a buyer gets a buy-side broker? And I guess you can turn that around the other way as well. If you're acting for a buy side, if you're acting on the buy side, should you recommend someone get a sell side broker? Oftentimes, yeah, I do, because a lot of the times it comes around valuation. And so that if you've got someone who isn't experienced on the other side, you come up to roadblocks that aren't necessarily real. And so that if you can have professionals on both sides of the transaction, you're more likely to be able to get to something which is sensible, because you both have an idea in terms of what custom and practice is in terms of valuations, customs and practices in terms of structuring deals, legal agreements and various other things like that. And so that there are merits in having someone on the other side. I guess what I have done a couple of times is to, whereas there's some valuation issues, I've given them my views in terms of valuation. And then told them to go away and to get either a limited scope valuation done, so that they know that we're not trying to rip them off, because a lot of them have unrealistic expectations on price, and so they need somebody on their side to be able to say, well, this is the market price for your business. You may not like it, but that is the market price of your business. And so that I have sent people away at times and said, look, we're not trying to rip you off. You go and find your own side. Okay, so would really appreciate feedback on this and other webinars, and I'd really like some people to, with particular areas of expertise that would like to present them. They're actually pretty straightforward to do. We can talk through you how to do them quite easily. As I said, the idea is to have these recorded on and put on the ARBB website in due course. But if there's not any other questions, thank you very much for participating. Hope you found some use out of it, and hopefully we'll see you all at the conference coming up in a few weeks' time. So thank you.